The first investment is called a fixed annuity. Fixed annuity. It kind of works like a CD. So it's a policy. It's an insurance policy, actually. It has a stated rate of interest and a length of time that you purchase it for. 3 years, 5 years, 7 years, 10 years, 16 years in some cases. Okay? And we like it from the standpoint that it's paying earnings to you. And the earnings that it pays you are not included on your tax return unless you take the money out of the plan. So as long as you let the earnings continue to grow inside the plan, they're not taxed. If the earnings are not taxed, then your provisional income is lower and it may reduce the amount of Social Security that you're paying taxes on. So that's the first possibility. It doesn't pay a great interest rate, but it pays something, okay? The second opportunity is called a variable annuity. Variable annuity, okay? And in our opinion, that's not one of the best annuities to own. And I'll tell you why. Anybody ever hear of this lady? Yeah, you've all heard of this lady. Everybody loves Susie Orman, okay? I have this book here because when Susie first wrote this book, what she did is she solicited questions from her adoring public. And when the questions were on topics that she wanted to bring out, she included it in the book. So there's a question in here on page 510 of The Road to Wealth, which is one of her first books. By the way, everybody got one of those orange library lists when they walked in, okay? The books are up on the table if you'd like to take a look at them. They're my books. Please, if you look at them, put them back. At every workshop, about every 2 or 3, somebody walks off with one of my books. You can get any of these on Amazon. But every topic that I talk about tonight is in one of these books, okay? Anyway, so Susie says, my financial advisor is recommending that I buy a variable annuity within my retirement account. What should I do? Answer. Get yourself another financial advisor pronto. Okay, why does she say that? There's nothing wrong with a variable annuity other than the fact that you're overpaying for it. A variable annuity is basically a bunch of mutual funds wrapped inside an insurance policy. And if you bother finding out exactly what the costs are to own this, what you'll find is the costs are highest on a variable annuity of any other investment that you can consider. I frequently make phone calls when I meet with people from the workshops, and what we find out is they're paying anywhere from 3 to 4% a year. Sometimes it's a little less, sometimes it's a little more, every single year. And here's the deal. If you like mutual funds, you can invest in mutual funds way cheaper than what you're paying to have them inside the variable annuity. The other thing is you're paying for insurance, which you may or may not need. And so the reason Susie Orman says what she says is because she's saying, look, you can do whatever you can do inside a variable annuity outside the variable annuity for a lot less money. And what it really does is it guarantees an income stream to the financial advisor that wrote the policy. Okay, that's why we say variable annuities, not one of the good ones. Now, for purposes of Social Security, it works the same way as the fixed does, which means if you're not taking income out, you won't pay tax on it, and therefore your Social Security benefits are not affected by the income you're earning inside the variable annuity. Excuse me?
I have a question. Is there a point where you can take that money out and it would not be taxed at a certain age?
Never. Okay, the IRS is really smart. Okay, so the way that annuities are taxed, whenever you pull that money out, the first money that comes out.
My question is wrong.
Okay.
If it's an IRA, inherited, variable, or fixed annuity. forced to take the money out based on your age, and it is taxed.
Always going to be taxed.
And so it was granted before the tax.
Always going to be taxed.
So you should just cash
Any pre-tax money that you have, whether you inherited it or whether you've set the account up yourself, I'm going to talk about this later on, when you pull that money out is 100% taxable. Why? Because it's never been taxed. And the government doesn't like money that's never been taxed. They want to make sure you pay taxes on it. Okay? So, variable annuities help with the Social Security issue. They don't help in terms of taxability. In fact, it's even worse. I don't usually go in this far on this, but I will tell you that the way the variable annuity works, if you sell mutual funds and you have gains, those are taxed as capital gains, right? Assuming you've owned them long enough. If you clear out some of the mutual funds inside the variable annuity and you take money out, it's taxed as ordinary income. So on top of the fact that you're paying higher fees and expenses just to own this thing, when you take income out of it, it's being taxed as ordinary income. You're not even getting cap gain rates on it. So again, there are ways to invest in the same kind of investments without paying as much tax as you end up paying owning the variable annuity. Okay, so variable annuities. The last investment that reduces your taxes on Social Security benefits is called a fixed indexed annuity. And as we like to say, this is one of the good ones. It's been around since the early 90s. And what we like about it, by the way, remember, I'm working with folks that are retired or nearing retirement. So I'm looking for things like guarantees and the least amount of taxes and costs and fees that you would otherwise be incurring. So the reason this is called a fixed indexed annuity is there are guarantees on it. That's what the fixed means. And what the index means is, depending on which strategy you want to use, and I'm going to go into this in more detail later, you actually can get some of the gains if the market continues going up. But if the market goes down, you take no losses. Okay, that's huge. It's guaranteed so that you never lose money once it's credited inside this plan. So, any of these three plans will help you reduce the taxes on your Social Security benefits. From that standpoint, they all work the same, but we think some of them are better than others. Okay? That's all I want to say about annuities for right now.